Hello again, everybody. It's Michael with your supply and demand market report looking at indices. We just finished our metals report, or commodities, I should say. So we're going to look at indices now, going around the world. We'll start with the NASDAQ, where we left off the last time we were together. We talked about the strength that has been in the NASDAQ. We're looking at this as a trend target for us, this supply zone up here. It's not one that we are considering initiating trades at, because again, this is for educational purposes only. It's not financial advice. I'm not a financial advisor, so please don't take any trades or put your money at risk based on anything you see or hear in these videos. But we're looking at that as a potential area where this significant uptrend in the NASDAQ could pause, where people may look to take some of their profit. As you can see, it's on the daily, zooming in on the daily chart, it's just continued to make higher highs and higher lows, even from small bases, and making it to new highs. It is beginning to get a little bit tired. We can see that from the way the candles are forming, which is not surprising, as we said, given that it's coming up into this area. We are still looking for a pullback, and it could be a significant one, but there is absolutely no evidence whatsoever of that as we speak right now. For now, the bulls are entirely in control of this market. It's just at levels that we would not consider buying because it's had such a big move already. It's not advisable for us to buy after a big move in price. So it's on the watch list, but it's if you're long, whether that's for a long-term swing trade, or even for intraday trades or one-day swing trades type of thing, a lot of people will be considering what they'll be doing into the week ahead. We've had the debt ceiling presumably solved and behind us. We've had the jobs number also out behind us. Non-farm payrolls, which produced, I believe, more than twice the number of jobs expected. So there is a disagreement about what the Fed is going to do next, and that's what's going to move this market. People think that the Fed is not going to increase rates anymore. Some people think because they haven't beaten inflation, particularly core inflation, that they have no choice but to keep increasing. If you look at the Fed's fund rate page, it's gone down from a 70% chance of rates being increased, and it's down now to the low 30s, I believe. So people are believing it's pause time for the Fed. We'll see. Later this month, we'll get the results out of the Fed. But for now, in this market, the bulls are in full control. The quality demand levels are down here into this area on the weekly chart, as you can see there. And we're coming into some supply. Looking at the S&P, it's finally broken out. We were here last week, and this week it finally punched out of the range that it had been on. It's sitting into its own supply zone, which is a more significant supply zone than the one that we saw on the NASDAQ. The NASDAQ for itself is up here. The NASDAQ, compared to talking about relative strength, the NASDAQ is somewhere up here, whereas, as you can see, the S&P is still negotiating its own version. Let me just take you quickly back to the NASDAQ. So this level is where the S&P is at, whereas the NASDAQ is already up and to the next level. That's primarily because of the buzz around artificial intelligence, and the NASDAQ being primarily a tech-heavy index compared to the S&P, which has a lot more diversity in it. So S&P is into supply. It's not a place where we'd be looking for, big, long positions. I'd rather it come out of that supply and then make this area, for example, more interesting for us to look at a potential buy on a pullback. For now, this area is not something we're considering until we have prices break out of the supply. What about going short? Not impossible, dangerous though, because of the strength of the trend. Okay, let's go down under. Australia, nothing. It's caught in the box we drew last week, still caught in that range, undecided as to where it wants to go. We are seeing buyers trying to hold this market. Look at the wicks on the weekly chart. Look at the wicks. Every time sellers try to get some sort of action going, the buyers come in and they're closing it back near the open again. The problem is that they haven't managed to get any upside traction to actually take out all the sellers that are at these highs and these highs. If they can do that, maybe it might be time to look more closely at Australia. But for now, it's caught really, and you can see the trading range that it's in right here. Yeah. Japan has been the strongest, or one of the strongest, if not the strongest, going to new all-time highs, according to this broker anyway, going to new all-time highs. And you can see this is what people talk about with, a breakout and then prices coming back to retest it with previous supply becoming demand. Look at the level that it worked through. That's the pullback right to demand. The lines are from the weekly chart. It's the area of the previous resistance. It broke out last week. It had an immediate pullback, is why we didn't trade it. But obviously, I saw it. I observed it. I didn't buy it because it didn't fulfill my criteria, but that's just my criteria. The market doesn't know or care about me. It doesn't mean that that these levels won't work just because they don't fit the criteria we set individually for the levels we want to trade. I saw that happen, and it was interesting to see that this move still wanted to continue. So we never managed to actually trade below. If you notice, we haven't gone below the lows of any candle since the rally started in April of 2023. Since here, we've had higher highs and higher lows, and that pattern continued into this week as well. So it just speaks to the strength of the trend that we've been in. Is this the place? Should we be then looking to buy a pullback to here now? For me, probably not. I'm very conservative in the way that I trade supply and demand. This would be quite the aggressive trade for me. It's extended. It's not something that I can build a long-term business on, buying zones like this. And I don't like just throwing something against the wall and hoping it sticks. So those would be my thoughts. I'm sure there will be traders who are interested in that level just because the trend is so strong. I mean, hey, who's to say they're not right? Okay, and looking at Germany now. Germany, again, we use this as an example of that immediate return. We can see that, the buyers who are trying to buy into this demand with that immediate return just got stopped out now, and the markets are now returning. So it's been challenging for anyone trying to buy into this circled area of demand just because this didn't move away far enough, didn't have the stay away period. We like at least 2 candles away from the level. One of them should be the stay away. And it pulled back. It took out the stops below there, and it's now rallying back. So it's in consolidation over here. You can see it trying to form what looks like a topping pattern. Where are we at in terms of all-time highs? Let's take a look. Looks like on this broker, we are at all-time highs. So it's negotiating these highs from back in 2021, 2022. It's poked above them, but come back and removed a low. So we now probably will have some time spent in this range, and we'll see how we get on with that. But still a watch, nothing to do. The UK is in a range. It's reacting to supply above. We did take out, I think we talked about this last week, we took out that demand, and we've gone back to supply, which was created, that took out that demand, and we've had the reaction from it. We are now in a move down. We've had prices return to a supply level, which is still part of this move. This is not you trading weekly levels. This is you anticipating that this weekly trend to the downside is going to continue. I'm speaking of this daily supply, this base drop supply on the daily. Because you're not trading a weekly level, you're anticipating that this daily, I should say, downtrend is going to continue, because there's no weekly level where you're at right now if you look at both charts. So you are caught right in what is the definition of the middle. For us, it's not a place that we like to trade. That's the range we're talking about. And look at where you are. If you put a Fibonacci extension or trade, or Fibonacci tool, I should say, and put that in, you'll see where the midpoint is. Let me take that dark background. So you are sitting right there. The dashed line you're looking at, and you're sitting on, is right around the middle of that range, from the high to the low that you're caught in. So it's not the greatest of locations, was the whole point of all that spiel, right? But is it a level? Absolutely. Is it decent? Absolutely. Okay. The Russell 2000, again, had a good week this week. Really, really good week, but it's still in that range. It's the weaker sister. It hasn't broken out like the NASDAQ, definitely not like the NASDAQ, and not as strong as the S&P. Still caught in this range. A local range here on the daily is what it's looking like it wants to, or it has broken out of. So that's all of this. It's still got ways to go to get to the highs of the range, which is around there, as you can see where we're at if I scrunch that up. So let's see how far we get, yeah? But it's not one that we're trading just because of the weakness. We're not shorting it and we're not buying it. It's in the middle, just like the last one we just saw. All right, so that's the indices done. 12 minutes, start. I didn't make the 10-minute mark, but I will keep trying until I get it down to 10 minutes. All right, but thank you all for watching. Please subscribe if you haven't. Like the videos. If you have any comments, please put them at the bottom of the video. If you had any markets you wanted me to add, please put them in the comments. If you wanted to ask about the one-to-one mentoring or the video course, it's storehouseanalytics@gmail.com. Thank you for watching. Bye for now.